Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So here you can see the market has started actively. The new year is with the direct upward continuations. Just recently we said that the overall price action here that we see mostly suggests upward continuation because market stubbornly was moving higher on the previous week, as you can see on the daily chart, and we said that probably it could be the upward continuation. So here we are following with the same pattern that we discussed in the weekly chart, in the weekly report. If you remember, we said that one of the possible patterns that market could form here is reverse head and shoulders, because we have the significant bullish pattern on the monthly chart. This is the bullish grabber, and it suggests the action above the 1977 or even above the recent top. On daily charts above to 2075, it's also possible. And to bring to reality this upward action, market could form some extended bullish pattern. One of them is the head and shoulders that we discussed in the weekly report. You can see market successfully has passed through the significant resistance area. Here is not just the 1880, 1920 area, because if you take a look at reaction points, you could set a lot of different fib levels from this, and these reaction points. That gives you some fib levels inside of this range. So if you remember, initially we have the 19 even area here, as market has trying to break for a significant period of time. So first test was here, then it's again this high wave, that's again, and then finally market has broken it up. So you can see market is not at the overbought. It easily could continue upward action, and we suggest that next stop should be around 1956, 1960 area. That's theoretically where the neckline of the pattern could be formed. So, and this is also next fib resistance. This is important level because it's based on the all-time top here, right from this point to these lows and 618 pullback. That's the level where reaction, some retracement maybe should follow. At least that's suggested by this pattern. Theoretically, it could be the direct upward breakout. This also could happen, but with the shape of the pattern, we would like to get the pullback. Just this could give us the chance to take the long position. So that's what we have on the daily. On the intraday charts, market has hit the targets of the butterfly and the OP target that we have specified previously. But since it stands very close to the next resistance and we see the strong acceleration here, we would not consider deep retracement on the reaction on these levels. Maybe some pullback, some reaction could follow, but hardly it will be too significant. And the validation point for this bullish setup stands approximately around 19 even, because this is important consolidation and some border between these two trading areas here, below it and above it. And to keep the context valid, market should not return back in this previous consolidation, or should not return below the significant level that already has been broken. So that's why we consider only the fib levels that is based on most recent type of action, and do not consider the possible deeper fib support levels that could stand inside of it, because we hope that with the grabber on the monthly chart and with recent performance, market will be able to hold above this area and to hold above the fib levels that we have on the hourly chart. So you can see on the hourly chart we mostly will consider 1930 and confidence around 1920 area, because we have hidden reaction point here is the grabber, gap, opening of the new year. This market just starting upward action. It provides us with the hidden fib levels, and we use the reaction, the point where real upward action has started. So this thrusting action, that gives us a confidence around 1920 as well. So that's the levels probably market should hold above to keep pure the bullish context that we have. Deeper retracement, return back to the 19 even, well, erasing of this rally, that will be not good sign. And in general, it will be not quite logical from the point of view of the targets and patterns that we have It is not suggested from the market performance that we have already in place. So in the current situation, retracement should be not too deep. So that's what we intend to consider. Next stop should be around, stop on the upper direction should be around 1970. So on the daily chart resistance, 1956, 1965, approximately in this area where we're waiting for response of the market to the neckline. We'll see what will happen there. Also, this top will be important because you can see this is the starting point of the Pfizer sell-off. So it's happened at the end of the previous year. So that will be important level to consider. And on the way to this level, there should not be too significant downside retracement. So currently we are watching just 1920 as the level this market should hold. In this case, we will have no questions to the bullish context. It will stand flawless. So let's see how market will play it out.